Good morning everyone, I'm Revati Ganeshan. Today I will be walking through my recent completed Power BI project, and this is my last project in my virtual internship training program also. First of all, I would like to thank Good Basics and Atlic Technology for giving me this structured internship training programs which really helped me a lot to strengthening my data analytical skills in Excel's Power BI and the SQLs, and I have done multiple projects related to this tool also. So today I'm going to presenting my last project in this virtual internship training through video presentations. In this project, I used two tools. One is a Power BI for this entire dashboard creation. Another is Claude AI for this prompt and PDF creations. Let me start this company overview and this problem statement. Let me give you a small intro about this company. Shield Insurance is a startup company located in India. Initially, the company was using Excel sheets for the basic calculations and business reporting requirements. Later, the company started growing very well across the different regions, and most people began trusting the company and buying or purchasing insurance policies. Due to this rapid growth, the company started facing managing data through Excel sheets, as Excel was not insufficient to provide a quick and in-depth business insights. To overcome the challenge, the insurance company decided to hire a data analytical team to implement the Power BI dashboards to get fast, interactive, and data-driven insights for this business requirements. That's the reason the company hired me as a data analyst. In this project, I developed a Power BI dashboards to generate data-driven insights that support faster and better business decisions. For the last week, I received this email from my business analyst Matthew. In this mail, they clearly mention everything about the Shield Insurance project. Recently, Shield Insurance company is facing a lot of struggles, and they did not get a quick insight because they were using the Excel sheets. So in this mail, they clearly mentioned this business requirements and a future list and this metadata informations and the last 6 months of this data also. Here I'm using this feature list to creating my Power BI dashboards, and I received 6 months of this transaction level informations. And let me give a small intro about this metadata informations also. uh, Here I received the data set contains five CSV files. So two is a fact tables and three is a dimensional tables. Let me start with the first table is a dim customer, contains all the unique customers information. Second table is a dim date. This table contains last 6 months of data. I'm using this table to analyze advanced time intelligent performance. Third is a dim policy table, contains unique policy informations about this about this company. Fourth table is a fact transactional data. This is transaction level data about this policy purchase. Fifth table is a fact settlement table. Using this table to analyzing this settlement informations. Let's see how to design this Power BI dashboard for the Shield Insurance Company. And Shield Insurance is a trusted insurance provider delivering reliable production solutions with a strong customer-centric approach. These companies offers a wide range of policies and ensure a fast and efficient claim settlement process also. This dashboard is designed to support decision making, to providing insights into revenue, customer performance, and overall business growth also. Based on this feature list, I designed this dashboard into three pages: executive view, sales mode analysis, and age group analysis. Let me start with the executive views. Executive views dashboard contains overview of this insurance business. This dashboard I designed some important KPIs and some charts and some filters also. Here I designed four important KPIs: total revenue, total customers, daily customer growth, and daily revenue growth. Here I added some important filters based on this age group, sales mode, and months for the last 6 months. And insurance company is operating in 5 different cities, and different varieties of policy they offering. So I added these filters. Based on this filter, this entire dashboards react. And I added overall overall performance table also, and a trend chart also. Here I'm adding dynamic button. Using this button to see this customer trends for the last 6 months and the revenue trends for the last 6 months also. So here I am adding under revenue under customer. Here also I am switching between to see this revenue performance and the customer performance based on the cities and the age group. Under this report under this report give this report is giving this total revenue and month over month revenue, total customer and month over month customer based on this city wise. Let's move into the second page of this dashboard is sales mode analysis. Using the sales mode analysis page to access overall information about this sales mode performance. Here I added two important KPIs. One is a total channel and another is your top performing sales mode. Currently, I have a 6 month of transaction level data. Based on this transaction data, this company is using four different sales channels. One is offline agent, second is offline direct, third is online app, fourth is online websites. Based on this four sales mode, currently online agent is generating more revenue for this company. Second chart is trends chart. This chart gives quick information about the revenue and the customer based on the sales mode. Which sales mode is generating more revenue, which sales mode is generating more customers, and underperforming revenue and underperforming customer also. Moving to the next chart is here revenue contributions and customer contributions by sales mode. Which sales mode is generating more customers and which sales mode is generating more revenue for this company. And this table is giving performance summaries by city wise and sales mode wise. Let's moving into the third page of this age group analysis. This age group analysis contains examine customer behavior segmented by age group. Here I segmented customer age in different levels of grouping into 18 to 24, 25 to 30, 31 to 40, 41 to 50, 51 to 65, 65 plus. Based on this age group, here I am going to analyze the total revenues and the total customers, which age group is generating more revenue, which age group is by our company policies mode. Everything I'm going to get this informations from this age group analysis. Here I'm adding four important KPIs: how much policy we sold, to which age group generating more revenue, and annual expected and total revenue also. Here I am adding column chart based on this age group, total revenue and expected settlement by this age group, and policy sales detail by age group based on this revenue and customers. And here I'm adding this line chart showed based on this age which sales mode is generating more revenue and more customer also. Now I'm going to deep dive analysis by using my dashboards to covering some important feature list answers. Here I'm going to divide it into primary analysis and a secondary analysis. Let me start with this primary analysis to cover some important basic insights. The first question is, what is the total revenue trend month by month? Here I attached the line charts will clearly telling the story is how Shield Insurance revenue move across each month. Let me see these pictures. Based on this available data is starting at the November month to April month. The revenue started at a November month is 132 millions. It's going very steadily for the next 3 months. December, January, February. After February, then oscillated sharply to hit peak of March month is 264 millions in March 2023. That is a 100% increase in this month compared to the last 4 months. After the peak, it suddenly pulled back to the normal range of the revenue 154 millions in the April month. Here we need to notice this sudden increase of the March month. It could be a normal seasonal effect after the campaigns, or it is a yearly sign of the customer churn. Now let's look at the second primary question is, which top 5 cities generate the highest total revenue? Now let's look at where the Shield Insurance revenue coming from this geographic. And this chart shows as the top 5 cities are Delhi, Mumbai, Hyderabad, Chennai, and Indore. These cities are the metro cities. It's a highly concentration cities also to contribute to more revenues for this shield insurance. It is 80% contributions, so it is a high concentrations patterns also. High concentration patterns means both opportunities and risk are there. On one hand, the cities are clearly high value markets. On the other hand, if any one of this face economic disturbance or local strong competitions, obviously the overall revenue numbers feels immediately disturbance. So we need to focusing on tier 2 cities also. Now tier 2 cities customer growth is increasing, but revenue is very low, so we need to focusing on tier 2 cities to give some discounts or campaigns to improve the 50 to 20 percentage distribution percentage of distributions of revenue to this shield insurance also. The third primary question is age group revenue split. Now moving from the geographic into this demographic, let's look at which age groups are driving revenue for the shield insurance company. From this column, it shows this 31 to 40 age group. Lead peak with revenue is 356 millions, and that makes intuitive sense. This is a peak earning brackets. People who are financially established and actively buying insurance to protect their assets and the families also. And the 41 to 50 is the second highest contributions revenue of the shield insurance company, confirming the mid-career professionals are shield insurance core revenue segment. On the other hand, 80 to 24 is generating or it's contributing very less revenue, 37 millions, but the segment has the highest lifetime value potential. And the last one is 65 plus segment is a consent segment, because we need to give the high settlement amount to the people, and this revenue contribution also drop up. The fourth business question is customer split by sales mode. Here, let's look at how the customers are actually coming the shield insurance and which channels are bringing them. From this visual shows as this shield insurance providing the four sales mode operations are online agents, online app, offline direct, online websites. From this insights, online agent is containing 55% of the all the customers, and online app and offline direct are tied at a 60% each, and online websites hold the smallest shares at 13%. From this insights stories, the online agent channels dominate with 55% of all the customer. That is more than half of the entire customer base coming from the human agent. This number confirms that for insurance buying, personal relationship and face-to-face trust are still the number one decision factor here. The second is the online app and offline direct are tied at a 60%, showing the while digital adaptations are growing also. The third is the online website brings in remaining 30%, the smallest channel, but likely growing as younger demographic enter the market also. The fifth primary question is revenue split by sales mode. Now let's look at the revenue quality for the each channels. The chart shows us the sales mode along with this revenues story is the offline agents leads revenue with the 551 millions, confirming it is not just the biggest customer channel, but it is the highest revenue generating sales mode of this shield insurance company. This makes completely sense because agents are having a one-to-one conversation, building trust and guiding a customer high value insurance. The second one is a offline app is generating 161 millions. It is a strong digital number, but notice the gap compared to the offline agent. Here, digital brings volume, agent brings value. So third one is your offline agent contribute 153 millions, very close to the online app, showing the human direct human outreach still commands meaningful share of the business. The fourth one is the online website is the smallest revenue contributions at 125 millions. Customer browsing and buying independently, low tier insurance policies. So here the strategy is clearly telling this offline agent generating more revenue for this company. So to investing, so business case for investing in a agent establishments to give better training, better incentive, better tool to improve the revenue also. The sixth primary question is daily customer growth rate. Looking at the pictures, a daily customer growth rate tells a powerful momentum story. In November 2020, opened at 126. It is a steady baseline and consistent customer acquisitions coming into this period. In December 2020, it was slightly picked up 130. It is a small but positive sign of customer acquisitions was building during this holiday also. In January 2023, back to this 126, it is holding the November month baseline and it's a flat, no alarm here. Because of after vacation of December. In February 2023, jumped to 139. The first clear sign that something was accelerating because of pricing, promotions, product push, or awareness program begin to kick in here. After March 2023 is where everything exploded. Daily customer growth hit to 128. This is an 81% spike from this February along. And this particular 1 month is the single highest daily acquisition rate in the entire data sets. Okay, this was not a organic drift. This was a deliberate growth event. Okay, after April 2023 pulled back to the 138. Here we need to understand what happened in March month. Was it is campaign year referral drive or pricing promotion? Identify the trigger and replacing in the next cycle. The seventh business question is age group versus expected settlement. This chart shift focus from revenue to risk, and it reveals a critical imbalance shield the insurance must address also. From this charts, the younger aged 80 to 24 carry the lower liability at 13.64 million, and it is a safest and most profitable segment of this company. As age increase, reliability also grows. The 31 to 40 group peaks at 191 millions, which is expected given, and which is expected given to the customers, and it is a highest customer base also. But here the real warning is the 65 plus group carries 131 millions in settlements while contributing the smallest share of revenue. This is a serious risk to revenue gap that can be ignored. So we need to take immediate actions to revise 51 to 65 and 65 plus brands and pricing adjust to reflect the true risk being carried. The eighth business question is customer distributions by age group. Here, the pie chart shows clearly the age group 31 to 40 is the largest customer segment with 42 percentage. That means almost one in every two customers belongs to this age group, and the second 41 to 50 age group is the second largest customer with 18 percentage. The younger age group 25 to 30 and 80 to 24 contributing 10 percentage and 13 percentage. The customer represent future of our business growth. The customer aged 51 to 65 and 65 percentage contributing very less amount of the customer segments. So the clear insight is more than 60 percentage of customer belongs to the 31 to 15. So we need to focusing on this uh, age group to can help our business drive future growth. Now let's look at the age group versus policy preference. From the table, the age group 31 to 40 as highest number of policies are followed with 25 to 30 contributing 3.6k, and the youngest 80 to 24 age group account for 2.6, and the 51 to 65 age group contributes 2.5k policies. The 65 plus age group has the lowest policy sales with 1.9k. The key insight is the customer age 31 to 50 main drives for the policy sales. So we need to focusing on this age group to sell our policy to drive future business growth. The last primary question is month over month customer changes. Here the chart shows the customer growth November to remained stably from November 2020 to February 2023 after a small increase of 6.15% in December, and customer growth turned slightly decreased in January and February, declining with minus 2.5 and minus 0.87. A major change happens at March month and jumped into 82.27 percentage because of the seasonal effect, product promotions, and campaigns. After that, the April month and customer growth dropped sharply to minus 41.4 compared to the last month of the March. So here the key insight is the customer growth was highly volatile during this period. While March delivered exponential growth, the sharp decline in April suggests the business should investigation the factor behind the drop to achieve more consistent customer growth. Let's move into the advanced analysis. And the first question is revenue per customer by sales mode. The chart shows the online app leads with an ARPC of 37.47K, making it the highest value acquisition channels. And offline agents follows closely at 37.03K, while online websites stands at 36.5K, and the lowest performing channel is offline direct 13.93K, which is nearly gap between 1.5K of online apps. Here the key insight is digital channel consistently deliver high revenue per customer than traditional channel. Increasing customer acquisition through online app and online websites platform can improve overall customer profitability and maximize revenue growth also. The secondary analysis is settlement risk versus revenue imbalance by age group. From the chart is clearly telling the story is the age group 31 to 40 is contributing 36% of revenue to get the settlement from the companies 54%. It is almost equal balance compared to the other age group. So it is a balance of revenue and risk. And while other compared to other age group 51 to 65 and 65 plus represent a growing settlement burden with a comparatively lower revenue contribution also. Let's see the last question of the second analysis is geographic revenue versus customer penetration gaps. Starting with the Delhi, it contributes for 14.59 percentage of total revenue and hold 41.01 percentage of customer penetration. This indicates a very balanced market with a strong alignment between customer order base and revenue contributions. The second one is Mumbai revenue contribution stands at 24.21 percentage, while customer penetration is 23.96 percentage. Again, we see a healthy balance market, but revenue is slightly outer performing. So we need to monitor the revenues. A third one is Hyderabad shows 16.23 revenue and the 16.17 customer penetration. This almost perfectly aligned, indicating stable and proportional for growth. In Chennai, revenue contribution is 10.75 percentage, while customer penetration is slightly higher than 11.05 percentage. This suggests a minor under monetization. Customer base is strong, but contribution is slightly lower compared to the other regions. And the Indore finally contribute 8.2 percentage revenue, while customer penetration is 7.81 percentage. Revenue is outer performing, customer share indicating strong value per customers. So here the key insight is overall the geographic distribution is largely balanced across city. Delhi, Mumbai, Hyderabad shows a near perfect alignment between revenue and the customer distributions. Chennai indicates slightly underperforming in revenue conversions. Indore shows stronger revenue efficiency but lower penetrations. Now I'm end of the sections. I am happy to present our some key insights based on this features list to cover my primary questions and secondary questions. I hope these insights will helpful for this company to find this problems to make a data driven decisions. Thank you so much for investing your time to reviewing these presentations. If you have any questions or would you like to discuss further, please contact me on my LinkedIn. Thank you so much.